Hello, my trading warrior brothers and sisters. Let's have a good day. Hiya, Paul, Shahab, Bran. Bran's got his swords out there. Bran, we're going to use the spirit of truth in our swords to find the truth in the markets. Shahab, how you doing? AJ, team, how's everyone doing today?
Hey, Dale.
Hey, Ryan. So I want to start off with the yen. I remember looking for about 135 in the end when we were down here. That's when I was calling like 31 the breakout, which measured 35. And we have a little, I can't call this a three. It may turn into one, but, nice
Two and a
divergences
half?
between, huh?
Is
Two and
it
a
a two
half.
and a
Yeah.
half?
Yeah. So it's a park, a drive, and a drive. Anyway, I think we're, topping. Okay, I can't rule out getting a three here, but I look at 10 years now, and like I was saying yesterday, a lot of objectives, and then it rallied another 5 bips, but we're getting the same type of action in the 10-year, a little more extreme than the end. But if we're topping out here, that could be, well, what's it going to mean? Lower yields. What's it going to be good for? Is it going to lift gold? Is gold going to hold the low from Friday? Silver holding the low from Friday. Is that it for the Dixie? Again, 104 lower high. Maybe we're going to pull back again here in the Dixie. I didn't think this was such great action in the dollar. Will the S&Ps rally with some interest rate relief? I think they'll rally, but they have to recapture 40.50. And wondering what your take is on yen. I know there's, they're going to be selecting governors for the BOJ, if they call them governors. What are you doing with the yen here? I know you're long-term bearish. You have long-term short positions on here. Did you add up here around 35, Ryan?
Yeah, I think the significant thing with this is it's got up there. It's tested it twice. It hasn't managed to close above it.
Right.
And the other thing is, yields have put on what, 20 odd basis points. And when we first got up into the, the three towards 390, we got up towards that 135. Then it dipped a bit. We're back up again, and it still can't get above that 135.
That's a great point. Yeah. So yields made new highs.
Yeah.
And the yen barely made a new high. So between the two, your relative weakness definitely probably the better short would be US dollar yen than notes. So then you got to ask yourself, right? And that's a great observation. I didn't think of it until you told me that if this, which is supportive of US dollar yen going higher, it can't make much hay out of this happening. What's going to happen if, we pull back to 380?
Yeah, exactly. You
Right?
probably get a steeper pullback in dollar yen. But there's always a time when you watch the yields and dollar yen correlation. There's always a time where, yields may go, but then dollar yen's going to run into its own technical and fundamental levels.
Right.
Areas where, okay, it doesn't matter if yields go at 4%. There's enough sellers coming in who need to do business at, say, 135, that the correlation just breaks down a bit or stalls, because it's never going to be 1-for-1 all the way. People are trading two different assets here. So there's always a time when sometimes the correlation just pauses and maybe detaches. But like you say, that's looking the case now. 135 is a bit of a tough nut still. We did have little pops above. It can't close above it. And, if yields do pull back a bit, then this might suffer a bit, maybe down to 133s again. Who knows?
Yeah, because the last thing I would bet on is a new high in the end. But I wouldn't have a hard time after this pullback, and I think it could be deeper, maybe all the way back towards the breakout here, that I could still see yields making new highs after a pullback. The yen, I don't see that happening. So you're right. They're going to start diverging. Later on, we'll get higher rates and the yen won't respond. It'll respond less than it is even now, is how that could play out.
Yeah.
So maybe we're going to make new lows here on a break to if yields pull back 40 bips from here. Maybe the yen could trade 125 again. Anyway, that's what caught my attention today is yields. It's been a pretty nice move up in yields. Nothing goes straight up without corrections, and I think that's part of it. What's going to be interesting is if equities can't make much hay out of it, and look what they're holding. So they're back at the 200-day. So, but between here and 3,900 is critical support in the S&Ps. We'll see if we're going to hold it. I know Jim Welsh. If you don't follow Jim, you should every Friday on Trader Summit. Jim's work is great. He's saying that if we have a shot for one more high, it's got to happen before the Fed meeting next month. So, you know, we're getting close to that inflection point, good or bad, from, you know, about 80 lower, 100 lower. So that's the way I see things. Oh, one other follow through. Platinum turned yesterday and it's following through here today. And this was a real nice level. You know, for a while, people have been wanting to be long platinum. I never thought when I traded this 3 drive up here, we'd be at 920. Okay, but this looks like a, you know, if I drew some fibs, probably 61.8 back here, but you're getting some nice action in the white stuff, platinum leading up 15 bucks with gold up 4. I still think that spread's going to work, and you're going to see platinum and gold come close to parity, or maybe even a premium on platinum like it used to be in the Stone Age when I was a young broker. How you doing, Kman?
Hey, how are you, Dale? Yeah, I'm good, thank you. Hello, everybody.
Your take on U.S. dollar yen up here?
I think we are in new Bank of Japan governor hearing territory, and okay, it also coincides with the top, that 61.8 in the 10-year yields, right? It's at 395. I've been showing that on the flow show a couple of times and in the room, and that is one thing that is capping seemingly the debates in the dollar roughly for now, and the yen is no exception. And also, when we started to recover, we identified this 134.5, 135 zone. It's where we stall.
Right.
Yesterday we had this little run up in the yen crosses. I took my euro yen off as well, so now I'm just waiting to see what happens on Friday, really.
What's the big number Friday?
No, it's not a big number.
It's the BOJ
I mean,
selection.
We should be hearing Ueda and his deputies and telling us how they see the yen situation right now. So
I'd love to see it make new highs on something like that.
You know,
on an appointment.
If
I'd sell it.
If Ueda says it's all going to be slow and very gradual, I can see dollar yen spike perhaps on the back of it. You know.
You mean like the 137.6?
Yeah,
or
137 perhaps 137. Yeah, they are going to change, but all will depend on the speed compared to other central banks. You know, yeah, there's still when I look at the Japanese data, they still don't tell me that fundamentally yen should be really bought for a long time. But we will have, as I say, before Friday, we may actually trade back into the 133s because the market will probably speculate a little bit on what they may say getting out of their monetary policy straitjacket. So I think correct, but and see, and then we see what he says, right? It's going to drive a lot of stuff in the end, depending on how he's going to drive monetary policy.
Okay, I still say Aussie's still the weak sister.
Yeah,
and I'm looking for maybe 67 on it. You have any
I've got
levels?
something interesting in there. Well, there's a 6780, which is a fib, but then I've got some interesting levels in the mid 67s. I think it should be possible unless the US yields start to turn, but I think it may be possible. We had a nice rejection above 69 the other day, and I think the only thing today is that we really tagged to the pip the low that we saw on when was it, on Friday? So that's already seeing some take profit buyers there. So then we'll see what's going on. But I think it's
Okay.
possible.
Okay. So vol picking up,
The
and
fall on what, on the FX or in the VIX?
VIX.
Oh, the VIX.
So we're going to take a poll. Who thinks this gap will be filled? Give me a Y. Who thinks it's going to be filled? Come on, guys. Team 2, what do you think? Are we going to fill this here?
I think so.
DJ says yes. Yeah, everyone's saying yes. Okay. Yes. Okay. Eventually.
What
Yeah.
if the S&P just hangs around here, 4K? Is this VIX going to come off naturally because it's not moving? Because it's a
I don't
volatile
know.
index, right?
Yeah, I don't know. Yeah, I mean, look, people are trained to sell vol. So I'm sure there are a lot of people saying, wow, what a great opportunity to sell vol. Because they have the recency, they've been right to do it, right? All the time. Every time you get a pop, they sell it off. They're collecting, they're taking the short side of some of these derivatives, and when vol comes back down, they're making money. So I'm sure there's some people looking to sell vol here. I will say this, back over this 24-25 level, it measures into the low 30s.
Oh yeah,
So
then it's gonna run.
we'll see. I think there are a lot of people stuck short vol. That's my view. And guys, it's not that I don't think everyone in here is talented, but majority answer was yes, it will be filled. I'll take the under on that it won't be. All right. So Blake, what do you think? This break in S&Ps, I heard you talking the other day that you thought 4,000 would hold and we'd get some type of rally. I don't know, maybe it was during our meeting.
Yeah,
3,900. Are we there now?
Yeah, I think we're there now. I
Okay.
think the 50 DMA is going to offer a lot of support for trend followers. I think we're going to get a bounce from here. I'm not bullish per se. I'm not necessarily bearish at these levels.
Yeah.
And if you look at, you look at the action and yields today, you look at the currencies and what's holding. I think it's possible we start to see a little bit of bullish price action. Now, here's another thing to think about is today we have the FOMC meeting minutes, and I've read a couple of people reference this, but we do have to take this into account. There's been a lot of data that's come at us in the last couple of weeks since the FOMC meeting minutes, namely the jobs report, CPI data, PPI data, retail sales. We've seen a lot of data come our way. And so we have to factor that in going into today. So I don't know how much of the FOMC meeting minutes are going to matter so much. So if you get, you get all this here, I guess I can take the charts.
Go ahead.
If you get, people, voicing their opinion following the meeting minutes today, make sure you take it all with a grain of salt, because, the real mover, in my opinion, is going to be the PCE data this week. And so I think if the market has a chance of going down, so if the S&Ps really have a chance of breaking down, and again, I think that if I had to think what's going to happen for the remainder of the week, and this is just me trying to imagine what I think is going to happen. Here's the 50 DMA that I was just talking about on the S&P. You can see it coming right through here. It's this orange line. You can see it. I'll just kind of draw it out with my
Yeah.
my
The
pen.
50 and 200 are pretty close to each other.
They are. They are. There's a lot of support down here between the both of them. You're exactly correct, Dale. So what I figure is going to happen is we're going to see a little bit of a bounce the next couple of days, and if we're going to resume lower and we're going to start really breaking lower, it's because the PCE data is so strong, and which it does have a risk of being. I mean, we had the view of the PPI and CPI today, or this last week. Good chance that PCE is going to remain strong, and I think the market's going to take a hold, take a note of that. But as you were saying a little bit earlier, Dale, and I think you guys were talking about it, what's in the driver's seat at the moment is the bond market, and the bonds have sold off pretty aggressively. If you recall the week ahead video, and let me just get rid of the last 2 days of price action. I referenced this 618 as being really critical support, and I thought we were going to hold it, but yesterday we pushed below it. But as we pushed below it, I don't think relative strength was following. You can see we pushed lower, but relative strength actually was divergent. So that's a risk to the bears. That's a risk to anybody who thinks that yields are going to continue to scream higher at this moment. I think the risk is that bonds, consolidate here for the next day or two before the PCE is the deciding factor on what the market's going to do. But that's my view. And I took any of my dollar longs. If you were here yesterday, any of my dollar longs that I had on, I took them off. You can see the Aussie is really starting to, you guys were talking about 67 cents. I think 67 cents is possible, but one of the key developments in the Aussie is we're holding channel support, which I wasn't sure if that channel support was going to hold last week, but we referenced this channel support over the last few weeks because there was only 2 points of contact here. I wasn't sure if the third point was going to hold, but now we're holding horizontal support, these recent lows. So I don't know if I'd necessarily want to be short the Aussie yet. Do I think it's eventually going to go to 67? I think it sees 67 cents before it sees 70 cents again. If you want to, take some odds on that, I think we go this way, before we go this way. But hey, if we get a hella bounce in risk, maybe not. Maybe I'm wrong here. But I don't want to have a huge view on the Aussie while it's holding up. And the Kiwi, we got a decent bounce. Kman, you were awake during the RBNZ last night. You stayed up really late, and we were all in the chat rooms. What are your thoughts on the RBNZ last night?
Yeah, a bit more hawkish than we could have expected. So it's more translating through the crosses than the dollar really, because if you look at it, we're like what, 20 pips away from where we started into the RBNZ, and had a bit of a yo-yo, but the dollar is not going too far versus Kiwi. But we have to acknowledge that 62, 61.95, 62 is starting to be a bit of a tough nut. So really big support here. I closed the rest of my shorts last night and replaced it with some Aussie, which I managed this morning. Still a bit short on the Aussie because just looking at the yields and the global picture really. Yeah, I mean this 62, 61, 95, 90 is good. We have to respect it on the Kiwi, right? We do, and as a result, last night I joined you in your ideas as I went short the Aussie Kiwi. If you guys follow the ForexAnalytix Twitter account, this was a setup yesterday. Following the RBNZ, I actually shorted the Aussie New Zealand last night through this support. It looks like we got further to go. So in other words, the Kiwi should outpace the Aussie at this point, maybe moving forward, over the next few weeks because of the hawkishness that they displayed yesterday.
But yeah, it's interesting how
Nice
the
picture.
the RBNZ was a little bit more hawkish, and I think you're right. You're watching these levels, which are going to be vitally important. And I've been playing the Kiwi on the short side recently, just because it's been really the one US dollar pair that's kind of broken down. It kind of led the way on the breakdown. But you know, a couple of weeks ago when we came out of this channel, but yeah, it's holding support right now. We got to respect that. You know, Tony said, hey Blake, I know it's tough to have consistently course correct, but this SPY is going to October lows. Do you think so? Do you think I mean, I think the S&Ps are going to break down eventually, but you know, are you willing to bet it's going to break down today? I don't know. I think today in the next couple of days, we get a little bit of consolidation. You know, nothing goes up or down in one straight shot. And that's just the bottom line with the market. So you gotta, you know, if you go back to over the course of the last Dale, let's think back. Let's go back last year and the year before last. You know what the overarching theme of the ForexAnalytix team was over the last couple of years?
Yeah, you've been
go ahead.
A lifetime buying opportunity in Aussie.
That's right. It's a lifetime buying opportunity. You're funny. No, but it was that we were going to peak here in equities. You know, we were going to peak here in equities, and we were going to have many years, and that, you know, going back to last year, we're going to have many years of a consolidation.
Yeah.
And, you know, probably, you know, a lot of back and forth, which is great as traders. You know, this is our playground. This is where you and I thrive as traders. Now, heaven forbid if you're a damn investor and you've got a shit ton of money in your 401k or your IRA and you're sitting on it hoping for growth for 8% growth over the next several years. I just don't think you're going to get it. We've had 13 years of a damn party that the Fed has thrown for the world. And after 13 years of partying, we're going to have a hell of a hangover. And so you got to take into account that it's not going to be all, you know, straight up every single day or straight down every single day. And you've got to get that in your head that we are going to have a lot of volatility. And, you know, just when you think the market's going to take a shit dive, it's probably when the market's going to rip your face off for a couple of days. And that's the way I'm going to approach the market. I approach the market not from an investing standpoint, not from a, you know, yeah, do I think the S&P is eventually going to drift down to 3,200 and maybe 2,800 over the course of the next couple of years? Yes, I do. Do I think we're going there tomorrow? Hell no. And do you think that they're going to rip this market right into your face for a couple hundred SPOOS points? Absolutely. That's the kind of market we're going to be in. And just when you think it's time to be bullish, they're going to jam that sucker down 300-400 points in your face every single time. And that's the kind of trading market that we're in. And I think that's the one you got to be faced with. So therefore, you know, if you're constantly believing the stock market's going to go straight down, I think you're going to be in for a tough time over the course of the next couple of years. Anyway, that's my 2 cents. Do you guys have any opinions on that? Dale, what are your thoughts?
Well, you know, maybe I'm biased by my book. Okay, so
I know you want to talk your book. Go ahead, talk your book.
Yeah,
what do you think?
Well, I'm just biased. I think that you know, if this is a breakaway gap in VIX and VIX is starting to roll, that the recency bias is that it's a range and we're not going to have either a melt up or a waterfall decline. So I think the minority now is that we're going to have big moves. Most people on CNBC are like defining the range between, I don't know, 36 or 38 and 43, and we're going to be stuck in that range. I think we take out the range low.
Really? All right. Well, yeah. Ryan, what are your thoughts?
Do you want to know what I think?
No, not really.
Okay.
Ryan, what are your thoughts?
Yeah, what do you think,
Hey, I wasn't sure if you're going to be here today. I know you're not feeling well, so I hope you.
I am.
I am, buddy.
Thank you. No, I am. I agree that we're going to be going sideways and a little bit lower, but I do think that with rates being high for longer, the pain is going to be felt. And I was looking at the chart. I'm talking about the average consumer. I was looking at the chart of the US was it savings, how it spiked up with during COVID and the handouts and all that, and now it's gone back down below where it was pre-COVID, and debt is going exponentially higher, and there's more credit card debt now, I think, than there ever was. So I think that we are going to see a move lower in stocks. It makes sense, and it makes sense because the Fed is probably going to try and stay higher for longer. But unfortunately, I think that they are going to step in again when markets start really going lower. And I mean, by really going lower, I mean testing pre-COVID highs. So 3,300, 34. I've talked about this for weeks and weeks. I still think we're going there. And if or when we get there, I think that's when we're going to see trouble in for the average consumer, and the Fed's going to go step back in and start reversing all this action. Unfortunately, liquidity is gradually being reduced. Exactly, Charles. So this is going to be a problem, and it's going to, I think, manifest itself in the next year or so. And I think that the Fed's going to step in and try to massage markets once more to the upside.
And that's the thing about massaging markets. It's the Fed and other central banks, keeping liquidity, preventing crashes, right? And that's the thing, is we're going to see a lot of fits and starts over the next few years. And don't get me wrong, I'm not a bull. I'm not like the S&P is heading to 4,400. I'm not that guy. I'm a guy that believes that we are going to be drifting lower, but it's hard to get, like, you look at, this is my bigger, longer term map of the S&P. I use this one for intraday analysis, but I use this one more for my long-term, outlooks. I think the S&P still has, some downside, but if you're talking over the next couple of days, and we just basically completed a, AB equals CD move, like an equal leg move. Like you start doing that, it's like I get real hesitant trying to chase markets at this point, right? And it's, like if I'm trying to short here, but the market's been falling for the last 5 or 6 days, I go, well, the smart money was selling a few days ago. I'm not so smart 5 days later. You know what I mean? And that's the point I'm trying to make. And I think, any rally at this point back up to like 4,100 in the S&P is a selling opportunity. I just, I'm hoping we see that first before we get more downside. And when you start to see things happen in the currency market that are an echo of that, and I say that because you got the Aussie holding support. By the way, Ryan, I was watching your trade-off show with Michael Brown yesterday.
Ryan is off desk, mate.
What's that?
He had to
Ryan
go.
is off desk. He had to step up.
Oh, he had to go. Okay. Ryan called it perfectly. He's like, hey, I'm selling rallies in the dollar Mexican peso at 1850. I mean, we went to 1848 last night and reversed. I know because I shorted it. If you were in the ForexAnalytix chat room yesterday, I shorted it because we were holding below support. Now, do I think we're going lower before higher? Yeah, I think we're going to do this. We're going to do this and then bounce off of this long-term channel support and that type of thing. But when you see like the dollar Mexican peso reversing where it should, that again, that's just another thing that gets me a little bit cautious about chasing the short side of the market when that this is a risk on type of move. And then you got gold holding above the 618 retracement. I mean, Dale, I closed out my pattern in play in gold because I still think we're eventually going lower, but at this point we could be setting up a nice little inverted head and shoulder pattern in gold and trade right back up to here before rolling back over again, right? So I get a little nervous when setups that you have in the market are taking their sweet ass time to play out. The longer they take to play out, the less likely they are to complete your goals. So anyway, just a few thoughts. Do we have data coming out? I don't know. Stelios might be off of his game today. Stel, do we have any data?
I am off my game.
I know you are. We got minutes, and I don't think we have anything too terribly important happening right now.
Nope, nothing.
Nothing. Okay. So we have FOMC meeting minutes. Hey, Ryan had to step off the desk. Kman, any last minute thoughts before we roll out of here? I know Steve's not here.
I think it's going to be a non-burger, the FOMC minutes this time. I don't think we're going to see too many surprises in there, at least. I don't see it as a surprise move. Algos will pick every word apart as usual, but
remember that. Remember, sorry to interrupt. Remember, they didn't have the CPI or PPI or the other good data that we had over the past 10 days, or at least you hope they didn't have that data
I
back
think
on.
They had the jobs number.
You think the jobs number? Yes, but the rest, I don't think so. So if it comes in more dovish than expected, remember they didn't have that number.
Yeah, so that, just understanding that there's so much data that hit the markets ahead of the FOMC meeting minutes is so important. Hey, one last thing. Do you guys want to know? I'm going to give you guys a little cue here. For those of you that are non-ForexAnalytix subscribers, that means you're not with us every day in our private shows. I'm going to give you guys like my number one, get me the hell out of Dodge indicator. So for those of you guys that think the market's going to absolutely 100% crap the bed, this is my number one indicator right here. And this is the, it's Kman and my favorite pair. This is the US dollar South African Rand. So if you guys really want to know when I'm like, okay, the market is done, and stick a fork in it, it's ready to go. This is it. And if you see this thing break out, you see this thing doing this, breaking above all that horizontal resistance right there, the currency market is prepared for a shitstorm. So there you go. I'm going to give you guys a little bit of tip. And matter of fact, if you guys want to join the ForexAnalytix community and be chatting with me and Kman and the rest of the team, Stelios, all day long, make sure you try out ForexAnalytix. It's only $1 for 10 days. So come join us. All right, Dale, it's all yours, buddy.
Thank you, Blake. Thanks, team. Feel better, Stel. Thank you, Kman.
Thank you.
All right, Patrick, my trading warrior brother, welcome back to F.A.C.E.
Hi, Dale. Always great to catch up.
Yeah, I know you brought up how time flies. We talk to each other every 3-4 months, and seems like a long time, and then boom, here we are again.
I know, it's crazy.
Wait till you get older, it flies faster. Anyway, listen, buddy, what's top of mind for you, and are you going to share your screen?
Yes.
I want to acknowledge that last time I was on with you and Kevin, you guys were spot on about that the euro had bottomed, the dollar had peaked, and that metals were about to break out over 22. Silver did it, got to 24.5, and gold was really the star of the show. But I'm willing to go wherever you want to go. So you want to start with, okay, so a ratio chart. Okay.
Yeah, look, this to remove noise when you're looking at individual charts and you're playing short-term plays and they don't pan out, you gotta take a step back, put up your ratio chart of a major asset class, and these are the two antagonists. Is that the word? Like the two? Yeah. So you have the gold, which represents the commodities, the real assets, the anti-growth, and then you have SPX, which is growth. So as soon as you put that ratio up, you guys who've been looking at ratios over and over again, you'll see that if ever you overlay another instrument and you see that its chart pattern looks like the chart pattern of the ratio, then you know that ratio is actually telling you those are the capital flows. Let's say here as it goes down, that's capital flows leaving gold in favor of SPX. And look what happens to silver price, Dale. It tracks the capital flows as defined by the gold to SPX ratio. So people wondering, why isn't silver at all-time highs like gold is? Well, silver does not track gold. Silver tracks gold's performance versus the SPX. So that's a key takeaway. I could put that all the way back. I'll put logarithmic. I'll do a reset. I'll show you all the way. But look at that. Look at the 70s. So that's what you got to look at. So for those silver traders out there, and you're wondering how come silver's not going above 28? How come it's not able to break out? Well, that's what's happening. I could even overlay the precious metals fund. So these are gold and silver miners index since 1968. It's the oldest one. I'll just hide my silver chart.
The X,
and,
yeah.
and you'll see here the ASA chart. It tracks also pretty much the gold to SPX ratio. So until reset chart, until gold is able to break out versus SPX, forget about the miners doing anything constructive, forget about silver doing anything constructive. Here, look at the 2000 bottom. Look at how the gold miners track those capital flows to practically perfection. So that's what you got to look at.
So
So
what do you
now-
mean by capital flows?
Well,
Capital flows into what? Into the miners, into equities? What kind of capital flows?
So let's say you're talking capital flow. So let's say the capital is, let's say the money supply, or
Okay.
there's money out there. It's floating out there. The money supply could
What's
be
it
increasing or
flowing
decreasing.
into?
Yes, that's it. So when you put a
Okay.
ratio, gold versus SPX, essentially, let's say for X amount of whatever capital, if the ratio is going down, it could be
Yeah.
gold and SPX are going down, but the ratio is telling you that it's going down less in one of the two instruments than the other one. And just that shift is enough to the charts in those which are guided by those flows as defined by that ratio, they reciprocate or they mirror those flows. It's like so clear, you know, when you start moving the chart up and down, you see that like these gold and silver miners, they have different CEOs, they have different fundamentals. Why are they following practically to the T, to the month, a ratio chart of gold versus SPX, right? So that's if you ever wanted a Rosetta Stone to understand how an individual price chart moves, then you have to understand to what asset class it belongs to, but more importantly, its asset class, how is it performing versus its adversary? And that will tell you huge clues of where you are. Look at this. If I just do regular TA on the, I'll put back my lines on the gold silver chart, gold to SPX chart. Here, this rally right here in 2019, that went all the way to 220 here when gold went above all-time highs and everybody was looking to the moon. Well, that was just the first bear market rally within this descending downtrend of gold versus SPX. It never closed above the Ichimoku cloud. It was the first reaction rally, which essentially helped create this, what I called a wake-up line or early breakout line. At this stage, at this angle, it's probably more a wake-up line. It started morphing into existence. Here's one bounce, two bounce, three, and here a fourth bounce to perfection. I'll zoom in for you guys.
Okay.
So now,
So what are you looking for? We need a close over that wake-up line for you to be constructive.
Yes.
What, the physical and the miners, or the miners?
Well, this line right here, if ever we get a convincing close above .48, but maybe more .50, and the real party starts once we close above .66 about. So when gold, the physical, is worth half of SPX, no matter what the value is of the SPX, then the miners will start really picking up on those cues, and they will mirror the price pattern of that ratio chart. So that means gold is holding its ground. People are seeing it today. See that nice wick? Even if gold has not been going up, because the SPX is going down and gold is going down less fast, the ratio is going up, which is super constructive. And after that, eventually gold will break out on its own chart merit. I'll have a quarterly close above, I think I have it 1930. So a convincing close above 1950, a quarterly close for gold on above that level. And it's going to be total mayhem. That ratio chart will probably be breaking out at the same time. I'll put you just the gold chart. I'll put on the quarterly. And the quarterly, guys, it's coming up close. So remove drawings.
At the end of next month.
That's an ugly candle it did there. Wow.
End of next month.
Yeah. So at the end of next month, gold would have to come all the way back up and close above 1936. If it can't do it this month, then this is probably what's going to happen. If it cannot do it above next month, then you have to wait. It could be a few more quarters before end of Q2, maybe end of Q. So this is
for the first time in a while, Patrick, I've heard people talking about gold going to 1500.
Yes.
They haven't pulled that out of the bag in a while. That would be taking out the 1610, double bottom there. I don't think that's viable right now. Am I crazy to think that, buying gold between, This week's low in 1780 could be the last bus stop for getting long. That's the way it feels
Well,
to me.
So right now, what you got to focus is on gold's performance versus that SPX chart. I'm just backing it up there.
Yeah.
You won't see gold breaking down massively if it's breaking out versus the SPX. You'll see it here, especially look here. We're at levels here that we had. I'll just zoom out all the way back to the look. If I stretch that, we're at levels when it broke out back in the 70s. So that balancing act, that pendulum between that ratio, that important ratio between gold versus SPX, it's historically been a balancing act. Here you see gold really underperformed SPX. That was the bubble of all bubbles. So even if nominally, I'll just remove all my remove drawings. Even if nominally the SPX is much higher than it was in the 2000s, because gold price appreciated, it's showing you the true reflection of SPX's real appreciation, and it wasn't even able to surpass its .com bubble. For me, like, because of ratio charts, I see the true bubble of the .com bubble might be a bubble we'll never ever see again. This was like the ultimate bubble where gold was way undervalued and US equities were way overvalued. So look, we're back at the
gold went to 200, NASDAQ was 5,000.
That was, it was back in the here, we're back in 1972.
2000. Yeah.
There's one case where we could be, here's the bearish case, guys. We could be back in 94. I don't know, maybe a 4% chance, 5% chance that that's where it is. There's a possibility that we're here. If ever SPX, if ever gold cannot break down versus SPX and this thing just melts down, then we're at this type of level where we're going into a hyper bull market for US equities, and just gold just now it goes to your 1,500 targets. It stays there for a couple of years. That's the bearish case for gold. If gold cannot strike now and close above that .5 and that .6, that 2/3 of SPX, then indeed there could be a situation here where, but when you look at the rate of change, look at the rate of change here. Below is the distance even from the moving average. I'll put the rate of change, guys. The 7-year rate of change for gold is climbing, getting closer to that positive zone, while in the 1994, well, it was trying to climb, but it failed. It was also a little lower. It was not within striking range of that zero line. So to have a positive 7-year rate of change, it's look, yeah, there's a lot of weight of evidence. You got to look also at the the NASDAQ chart, which broke down on its own chart merit. I put this one here, which is, I'll just show you this one here. Look at this. I don't know if you guys love monthly candles, but that thing during the month, that candle for NASDAQ was all the way up here.
It's a reversal month now. Yeah.
It looks super bullish during the month. That's why people playing on the smart time frames, wait for the monthly close, please. Because that thing it was a white candle all the way here. People were calling breakout above the moving averages. It's game on. Kramer was saying it's bull market's raging. But look, 5-6 days later, or during like in the past week, now we have an ugly wick right here. So the sellers are coming in. They're saying, guys, forget it. It's not ready. And if ever, there's 5 more or 4 more trading days, Dale. If ever it closes here below the 3-year, below the 1 year, if ever it starts sliding below 1100, there's no more volume support here. That thing could just melt all the way to 8500 easily before it stops. It's this is super ugly. I'll show you even, well, that's a NASDAQ. Here is the Tesla chart, perfect back test of a huge topping pattern, a multi-year topping pattern, confirmed breakdown in, I think, November. Back test below the 1 and 3-year moving average. That's super bearish. If it cannot close above 206 or 210, Tesla's done for. ARC Innovation, forget it. It was super low. I thought it couldn't get lower, but it's not even able to climb back above its 1-year moving average. And now, if it cannot get above this section here, that support is now resistance. So ARC might actually fall more. And for Bitcoin guys, that could also smell another down leg for Bitcoin.
You have a view on VIX?
The VIX. Yeah, I have the VIX. I'll put.
You guys don't follow VIX that much, do you? You guys do? Okay.
So we have the VIX. The VIX is refusing to to go back down. The US dollar is refusing to go back down. I put the DXY here on top. So you'll see that the DXY and the VIX pretty much is the same, right? When people are selling their US equities, holding cash, well, look, the DXY is going up. Look at that. It tracks it pretty much, right? So you do your TA on the DXY or do your TA on the VIX, you choose, but they like going up together, right? So the DXY not doing new lows, the VIX not doing new lows is a scary proposition, and this thing could crescendo upwards violently. Yeah. And yeah, that stuff could sell off there, but this is really ominous. What's happening to the to Amazon? Yeah. Amazon not able to climb up in any meaningful way for a while now. I'll just put the Amazon chart.
So this could be a great test for precious metals and miners if we get this washout in equities. At times, you know, they usually would go down with the market, sell what you can, kind of thing, right?
Yes.
And you know, it's going to be important to see the relative strength of how miners hold up compared to NASDAQ, S&Ps, and how the physical holds up. Yes. And if the dollar, so are your dollar bullish?
I'm not bearish, because you cannot be bearish the US dollar when the US equities are close to a meltdown. You just it's tough to see that, right?
It sure didn't make much headway. The dollar really didn't make that much headway with the sell-off we've had in the S&Ps, for example, yesterday. Dollar hardly moved lower. Just an observation that maybe they're beginning to separate, but I think there's a little more left in the dollar. But you know, doesn't Dixie need to close over 104 to like it, really like it?
Yeah, here, you're right. Here it's below the 1 year moving average. It's below what I call a sleep mode line. It's did this type of blow off top here. So now it's pulling back. So we got to wait. So you cannot be long at this stage, the US dollar. You could be short, but it's I call this no man's land until it's able to regain the 12-month moving average. And eventually there's going to be some type of wake up line here. Then you would probably go long.
How about gold,
the way I'm using the DXY, when I see a chart like that, Dale, I'm not going to try to play just the DXY. I'm going to use it as an indicator in my weight of evidence to see if the markets are still at risk of some type of move up. Because you got to remember, look here, and this is where the metals differentiate a little bit. I'll overlay XAU USD on this one.
Yeah, they went
and you'll
together.
See that in the 2000s, the gold bottomed, and the DXY still flamed up a little bit more here. I don't know if you guys could see that here. The true bottom in gold
came earlier.
The DXY still flamed.
Yeah.
So it's possible that the gold to SPX breaks out. Gold puts in a bottom and starts moving up. Silver, same thing. While US equities keep rolling over and the DXY continuing to try to crescendo upwards. So it could be a roadmap to observe.
Okay,
the question
we've had
is
a pretty nice we've had a pretty nice rally in the gold silver ratio. That was part of the silver weakness story over the last few months, and to me it looks like we may have had enough of a bounce here, and that we could start to head lower again in the gold silver ratio. What are you thinking? This little bounce
this one's pretty much the inverse of the DXY, right? So the gold silver ratio, if I put in this is all financialized, these instruments. I'll put here the well, it's not the inverse, it's it tracks the gold. So if you think the DXY is going to go up or down, then that's the same type of relationship that you're going to get with the
gold silver ratio.
Yeah, because DXY going down, there's less risk of total market implosion. The gold silver ratio goes up when silver is a recovery metal essentially. So if silver goes up, it's usually the US equities are also going up. It's just that silver will outperform the US equities after a huge US equities drop. On the recovery, then silver is going to start pricing in monetary imbalances required to keep nominally afloat the US equities. Silver is going to do all that thing. So people think, oh, the metals, they go inverse to the SPX. No, silver especially likes SPX going up but it's going to outperform the SPX in the first legs while the SPX is recovering. You want to be long silver because it'll be outperforming the SPX, and you'll have SPX to silver ratio going down, but it doesn't mean SPX going down. SPX is most likely going to be going up, but silver will be going up faster.
Okay. I interrupted you when you were making a comment on Amazon.
Yes.
Tulin would like me to let you finish.
Yeah, no problem. Well, look, Amazon's another one. I've been monitoring Amazon for a while now, even during the crazy rally in Tesla and Netflix and people calling all these bull markets. My eye was right here. So here, Amazon during the whole, it's not able to get above this wall. So what I call a wall is previous support and resistance. In October of 2022 close, that is a clear breakdown here. Unequivocal breakdown here. Here did a back test of the def cross of the 1 and 3 year, can get back above. So that's a swing, a lower swing high. Here can never see, look, unless it does a miracle and it's able to close back above and undo the damage done by this candle below the 1 year, below the 3 year, below the cloud, below this horizontal support. This is super ugly. I don't know what people are trying to do.
You know, a lot of these charts that you're, a lot of these charts that you're showing are going to enter if this rally that failed last week after going sideways for a few weeks in indices, that it looks like it could be in the waterfall stage or capitulation stage coming up here.
Yes. And yes, exactly. And we're nowhere close to a capitulation for a true bottom, because to have a true bottom capitulation in the US equities, you need the distance from moving average. I'll put it back here. I'll put, let's say, the SPX. To have a true capitulation at the bottom here is my distance from moving average. So this is my gauge of fear of missing out. If you're super stretched from the 3 year moving average, then, oh, it's FOMO. The price has, the momentum has always accelerated faster than the moving average can catch up. And the same thing on the down. And look where we are here. We're barely, the SPX is barely, it's still above its 3 year moving average. And look, the capitulation bottoms for SPX happen when
it falls
the distance from 3 year moving average is down here somewhere. Here's the 2009 bottom. Here's the 2002 bottom. Here's the 1974 bottom. Look, this is fuel until.
That's why I like VIX. I mean, people have recency bias. They say VIX is broken. VIX is dead. VIX doesn't work. It's a waste of money to hedge. You know, all the sentiment indicators, it got down to 9% bulls in VIX. S&P's got up to 60% bulls. And, you know, one point that I noticed is that in last week, when people were saying, well, you know, the greedometer was at greed, but if it is a bear market, you don't expect sentiment to get back to 80 to 90. You expect sentiment to recover from 20 or 30 to maybe 50, 60. You're not going to get those readings that we had a year ago where you had 80, 90% bulls. If you're in a bear market, it just would come back to neutral before the next wave. Do you agree with that thesis?
Yes, there's that's the thing with indicators, right? Depending if you're depending where the price action is, if it's below those important moving averages, then it won't reset as much. And then once it rallies up, it'll get sold into. It's like, I don't know, people, they always have to ask, it's like for people to avoid FOMO and always trying to catch these bottoms, it's like they need to increase their variety of instruments they're looking at. Essentially, you have to look at the entire
jigsaw puzzle
of markets.
The whole jigsaw puzzle.
Yes. You have to
look
look
you
at
and
everything.
Kevin, I imagine you and Kevin sitting there with a big table and all the pieces representing one's yen and one's yields and one's the market and one's gold, and you guys are putting the pieces together. In fact, you know, I watch some of your videos, Patrick, on your YouTube channel, and one of the comments that I think really suits what your work and Kevin's work is someone said that you guys are the most long-term technicians of anyone he's followed, that you look at work, you know, you'll go back decades, you know, sometimes centuries with your work. And so I've given you guys, I have a new tagline for you guys. You are technical astronomers, because you guys look at the market through the Hubble telescope. Although the Hubble is not working, the new one's up there, but you guys definitely take that astronomic view.
You need to, Dell, because
Yeah.
look at an example. Here, I managed to have the Fed fund rate since 1913. I was able to aggregate or
yeah.
And people don't understand what's happening. Nobody understands. People have data. Usually it stops at 1960. Well, in all this period here was the descending trend lines. The Fed fund rates were going down. And then eventually in 63, they broke out.
Yeah.
Well, look what's happening all over again.
Yeah.
So here we have the paradigm shift type of trend line going down 40 years, and we broke out. This is not some random event where it's going to go back down to zero. If ever the rates go down, they might retest this breakout line here, but
we're in a new paradigm. The last 20 years are history. Don't look for them to return. Accept the new paradigm and adjust to it.
Yes, these, and you can only see this on a 100-year chart. You can only see that, and that's what I hope for day traders and all these traders. Take a step back. Once you understand the macro, then after that you could position your trades on the smaller time frames and know that you have those macro tailwinds in your favor instead of headwinds, right? Those capital flows, know that they're in your favor. But now the SPX, if they're starting to lose capital flows versus gold, then you should not be buying the dips in SPX or in growth stocks. You should be selling the rips. And so people should start doing that here. I don't know if I have time to show you this. I have here's our heat map from our website we built. So here we have all the SPX 11 sectors cross-referenced. So these are the performance. So let's say energy versus energy. Well, that's mine. You can't compare it. So here's industrials versus energy. It's losing, or it's so you could see the sectors which are outperforming the other ones. So here industrials are the strongest sector, energy is the strongest one, the strongest sector, industrial the second strongest, financials, healthcare, and then the weakest sectors are technology, real estate, communication services. So once you have a table like that, you're able to see which sectors you should be looking at. So instead of focusing on a sector like technology to go long, you should look at one of these top sectors, which is outperforming all the other sectors, and say, oh boy, look, I have energy, which is outperforming. Well, energy now might be pulling back against these ones because it's been beating everybody for a while.
For a year, over a year. Yeah.
Yeah. So it's already pulling back. So here I have financials versus consumer staples. And then you could look up at the chart, and then you could see if that thing ever, you could start doing your trend lines. And if ever that thing breaks out, then you want to go long financials instead of consumer staples. But you don't want to go long something that's below, let's say, a 700-day moving average, because you're at risk of having a waterfall, just something just going totally down. And this, you could see it on this chart. People always trying to catch the bottom. Those dead cat bounces, guys, you don't do V-shaped recoveries.
Is this a dead cat bounce in Bitcoin, Patrick? Let's wrap it with that.
Jesus. Well, look.
You didn't want to talk about that, huh?
I don't mind. If
all right, go ahead.
Nasdaq tracks Bitcoin tracks Nasdaq. It tracks.
Not lately.
It's forever, like pretty much since look here. I have ARK Innovation. I overlaid Bitcoin. The amplitudes of the moves are different, but overall, Bitcoin is essentially a speculative tech stock. Until it's able to do something different, that's what it is. I know
you're bearish.
I'm not bearish. Hold on. I was bearish back at 55,000 when Bitcoin was rocking upwards. I told people it's getting too stretched from the moving average. You got to get out. And then I did a final chart where I told people to get out of. Get out of Bitcoin. I think it was around 40,000. It was breaking down in weakness. Yeah. So now it's in no man's land, essentially, Bitcoin. It's trapped between 35,000 and 15,000. So it's no man's land. The move for Bitcoin down or up.
But long term, weren't you and Kevin looking for about 8,000?
No, only if it would close below 12,000 or something like that there. But there was.
So is the bottom in?
Well,
it's hard to be bearish Nasdaq and bearish Bitcoin at the same time now, isn't it?
No, you should. If you're bearish, if you think Nasdaq's going to keep going down, then your bias is for a resumption of a downtrend in Bitcoin.
Okay,
definitely.
Let's wrap it with that.
Yeah.
And why don't you show your website? Best place to follow Patrick's great work and Kevin Wadsworth's great work. Patrick at Bad Charts 1, Twitter, right?
Yes.
And you want to show your website where people could get involved, and they also have a good YouTube channel. Excellent YouTube channel.
Yes. Yeah, we interviewed Peter Granich last week there. That was quite fun. And this is the website, guys. There's a whole bunch of stuff, but Twitter, Kevin and I put a lot of stuff just out there on Twitter for free, but on the website you get like, the risk management and our trades and stuff like that. But Twitter's a fun place to get started, guys, for sure.
Yeah, follow these guys. If you want to really, be a student of market history, and also know how to deal tactically with what's happening now. This is a great partnership. I say that Kevin and Patrick are like 1 + 1 = 11.
I love it.
All right, my trading warrior brothers. I really appreciate you coming here and sharing your views with the community today.
I appreciate it. Thanks, Dale, for the opportunity.
Okay, buddy. I'll be back in touch with you. Talk to you probably in the spring.
Yes.
All right, Patrick, Kareem, everybody. You could join the team in 14 minutes on the Morning Edge. And don't just count your ratio charts, count your blessings. See everyone tomorrow. People are saying outstanding. Thank you, Patrick. People appreciate what you brought to the table today. Adios, everybody.